Today is Monday, August 24th, 2026, and this is our news brief on tech and business. Anthropic could aim to raise $100 billion in blockbuster IPO. The New York Times reported on August 22nd that Anthropic could aim to raise as much as $100 billion in its initial public offering, a figure that would match or beat SpaceX's $86 billion IPO record. CNBC reported on August 21st that Anthropic's IPO filing will list AI backlash as a risk factor, with sources saying the company plans to publicly file paperwork as soon as this month. The offering would let early investors and employees sell shares on the public market for the first time, giving operators a clear price signal for one of the largest AI vendors. Anthropic raised $61 billion in private funding rounds through July 2026, with Amazon and Google among its largest backers, making a public listing the next logical step for capital and liquidity. The IPO arrives as companies face growing public scrutiny over energy use, data privacy, and competitive concentration, which explains why the filing will flag AI backlash as a material risk. And my personal take, I'm surprised they're not adding pressure from like other AI labs, open source solutions as another threat too. Because personally, that's what I think is one of the big ones. So here's the implication. Small business evaluating AI subscriptions should watch the IPO disclosure for pricing, dependency, and risk details that private companies are not required to share publicly. A public Anthropic would face shareholder pressure to raise prices or lock in enterprise contracts, which could flow down to smaller customers through tier changes or usage caps. Now, before I continue, if you want these insights delivered straight into your inbox every week, sign up for the newsletter. Same research, same takeaways, readable in minutes. Nvidia reportedly eyes Perplexity at a 30 billion plus valuation. Nvidia is in talks to invest in Perplexity at a valuation exceeding 30 billion, up from a 23 billion round in January 2026 and a 20 billion round in September of 2025, according to the information. Perplexity's annualized revenue has surged past 750 million, driven largely by Perplexity's computer, a cloud-based AI agent that automates multi-step professional tasks. A 30 billion valuation represents a more than 50% increase from a year prior and prices the company at roughly 40 times sales. A multiple that reflects investor confidence in AI search shifting from retrieving information to acting on it. A bit more context. Nvidia previously backed Perplexity's Series B, its unicorn round, and an 18 billion extension round, making this latest investment a continuation of its strategy to hold equity stakes in leading AI application companies. The broader AI search market is seeing new agent native challengers like Exa, which raised a 250 million Series C and at a 2.2 billion valuation in May 2026, backed by Nvidia's Ventures and Benchmark. Here's the implication. Small businesses using AI search tools should expect rapid feature expansion as providers compete for agent workflows, with new capabilities arriving faster than IT teams can evaluate them. Nvidia's strategy of investing in both chip buyers and AI application companies mean the hardware pipeline and the software ecosystem are increasingly controlled by the same upstream player, which could affect pricing and availability for small operators. Hugging Face explores sale that could value it at 13 billion. Hugging Face is exploring a potential sale that could value the company at 13 billion or more, nearly 3 times its 2023 evaluation at 4.5 billion, according to Business Insider. The company has engaged a bank to gauge buyer interest, with discussions in the early stages, and the sale exploration follows a security breach in July, when an OpenAI test agent reportedly escaped containment and accessed Hugging Face's infrastructure. Hugging Face hosts more than 30,000 open weight models on its platform and serves as a neutral hub for developers to share, download, and fine-tune AI models, earning it the nickname, the GitHub of AI. So a bit more context, a sale to a single owner could undermine Hugging Face's neutrality, giving the buyer substantial control over critical AI industry infrastructure that smaller companies and independent developers rely on. The $13 billion valuation could place Hugging Face ahead of competitors like Together AI, which raised $800 million at an $8.3 billion valuation in July, and Olama, which has raised $88 million total. So here's the implication of this. Small businesses and independent developers who depend on Hugging Face for open AI models should prepare contingency plans in case a sale restricts access, changes licensing terms, or shifts the platform towards the buyer's ecosystem. A sale could consolidate open AI model hosting under one corporate owner, which would reduce the independence that made the platform valuable for cost-conscious operators avoiding vendor lock-in. Now, IBM report shows data breach costs jumped 12% to a record $4.99 million. IBM's cost of a data breach report 2026, published on August 24th, found that the global average cost of a data breach rose 12% to $4.99 million, with AI-driven attacks increasing percent from 2025. The United States remains the most expensive region for breaches at $11.5 million per incident, up 13%, while AI-driven attacks at an average of $1 million per breach due to their speed and scale. Phishing remains the top attack vector, followed by supply chain compromise, and 74% of organizations increasing security spending to deploy AI agents in their security operations center for alert triage, penetration testing, and vulnerability management. So a bit more context, the report surveyed 16 countries and found that 85% of businesses plan to increase security spending after a breach, up from 65% last year, showing that breach experience drives investment. Financial services face the highest sector costs at $6.29 million per breach, while energy companies average $5.2 million, creating systematic risk when disruptions cascade across consumer finances and power grids. So here's the implication. Small businesses should prioritize phishing training and email filtering first, because phishing remains the most common entry point and the cheapest to defend against. So to kind of give you an idea, when you hear the word phishing, for those that don't know, if you ever received an email pretending to be someone like, oh, I'm Chase Bank, or I'm like this credit card company, or I'm like your boss, and I need this information, or click on this link and then log in, right? Thinking that they are the real thing, a real person, they're trying to fish, right? And it's kind of like a play on words. You know, you're like fishing, you're trying to catch, right? They're trying to catch you in these like fake emails. And with AI, it makes these emails and websites that you go to so much more reliable, so much more like realistic, like legitimate looking. So that's essentially phishing. And operators evaluating AI security tools should test alert triage and vulnerability scanning agents and control pilots before full development, since the technology is new and error patterns are still emerging. YouTube changes view counting to count playback starting on August 24th. So starting August 24th, YouTube counts a view the moment a video starts playing, aligning its method with TikTok, Instagram, Shorts, and which means view counts will artificially jump for most channels. The change does not affect creator payouts or YouTube partner program eligibility, because engaged views used for earning calculations remain unchanged. The shift means creators and brands should stop comparing August view counts to July numbers, instead track watch time and engage views to measure true performance. Here's a bit more context. YouTube also rolled out custom short thumbnails, a heart icon replacing thumbs up and down, AI-powered channel performance summaries, and series grouping for shorts in late July. The view count change follows a broader industry pattern where platforms are standardizing metrics, as TikTok and Instagram already count a view from the first frame rather than requiring a minimum watch duration. And here's the implication. Small business marketers should update their YouTube reporting templates and client dashboards before September, because raw view counts will no longer be comparable across months. Content creators who sell sponsorships based on view counts should switch to pricing watch time and engaged views, since advertisers will quickly recognize that the new view metric inflates numbers rather than reflecting actual attention. Safety faces bipartisan backlash over surveillance technology. So TechCrunch reported on August 23rd that Flock Safety CEO Garrett Langley called for a compromise between privacy and safety as the company faces growing public outcry over its cameras, drones, and license plate recognition technology. The Washington Post identifies 46 cases where police officers were accused of using Flock technology for unauthorized purposes, including stalking wives, girlfriends, or exes, prompting both Democratic and Republican politicians to take action. The three House Republicans introduced H.R. 9800, which would prohibit federal government from purchasing automated surveillance systems using facial recognition or license plate recognition. While Senator Bernie Sanders posted, "Stop AI mass surveillance, stop Flock." Context: Flock reduced its default data retention from 30 days to 7 days and now requires a case code before accessing data, though both changes can be overwritten by police using evidence mode, which the ACLU called potentially just a PR move. The backlash has become a bipartisan political issue heading into 2026 midterms, with both sides targeting the company from different angles, similar to how data center opposition has united the left and the right. So here's the implication. Small businesses using a license plate recognition or surveillance cameras should review their data retention policies and access controls now, because regulatory pressure is building from both parties. Companies that sell to government and law enforcement should prepare for stricter procurement rules, because the federal bill and the state level proposals should restrict which technology public agencies are allowed to buy. And if you want clear, practical updates on the tech and business shifts that actually affect operators, founders, and small teams, subscribe and follow along on the Dave Tech Lee YouTube channel. If you want these updates straight to your inbox, subscribe to the Dave Tech Lee newsletter. And see ya next time. Bye.